so glad you can make our time to join us on today's episode of Tax Matters. My name is Olumuyiwa Matuluko. How's your week been and how is business going? Today's episode of the program is going to be a bumper one. There will be something for everyone to take away. In the wake of the amendment to the Personal Income Tax Act, which was effected in the year 2011, a new phrase gained currency in tax circles in Nigeria: presumptive tax. We have deliberately refrained from using the word new because we know that presumptive tax is not exactly new to these shores. For example, in Lagos State, artisans, market men and women, those who we ordinarily refer to as belonging to the informal sector, have had the opportunity to pay a lump sum of 2,500 naira per annum as personal income tax. You come, pay, come back for your tax card, and life continues. To give effect to that provision of the Amendment Act and to put together the regulations that the Act stipulates as necessary for the effective takeoff of the presumptive tax regime, the Federal Inland Revenue Service and the Joint Tax Board jointly organized a sensitization workshop in Abuja on the 4th of April 2013. At the well-attended workshop, the draft presumptive tax regulations for 2012 was exposed to participants. To underscore the importance of the workshop and the job at hand, the acting executive chairman of the FRS, who is also the chairman of the Joint Tax Board, was personally in attendance and he declared the workshop open.
As we may all be aware, taxation of the informal sector, and particularly persons and businesses that are not properly structured or are unable to keep proper and detailed records of their businesses' transactions, is a topical and challenging issue, not only in Nigeria, but also in most developing countries. Almost every country in the world has at one time or the other been faced with the challenge of how to bring such businesses into the tax net and ensure that those businesses comply with their tax obligations. It is in this regard that this stakeholders sensitization workshop is being held to provide a platform and forum for relevant stakeholders to come together and share ideas on the most suitable approach or approaches to taxing the informal sector.
Thereafter, the workshop got underway. Barrister Yemi Alade-Sewe of the Joint Tax Board presented the draft regulations on behalf of himself and Mrs. Gloria Iwuji of the Federal Inland Revenue Service.
The legal framework, Section 6, is the section that introduces this regime. And it states that, wherefore all practical purposes, the income of the taxpayer cannot be ascertained or records are not kept in such a manner as would enable proper assessment of such income, then such a taxpayer shall be assessed on such terms and conditions as will be prescribed by the minister in regulations by order of gazette under a presumptive tax regime. What this simply means is that there will be a regulation which will be gazetted by giving it the force of law, and it's to guide the regulation of presumptive tax regime in Nigeria. The scope shall apply to informal sector, including micro businesses that have annual turnover, that is the threshold of 6 million, and that would determine the exit and entry point, as we shall see shortly. The presumptive tax regime shall be on a turnover basis and may be rebuttable. So you could rebut such presumption that you are making 6 million or you are not. The categories of taxpayers to be administered under the presumptive tax regime. You have a long list: retails of products such as food, clothing, fashion items. The filing of tax returns. Due date of filing your tax returns shall be 10th of April, 10th of July, 10th of October, and 10th of January, respectively. And it shall be on self-assessment basis. You assess yourself, and then you file your returns. A taxpayer who does not earn income shall be expected to file a new return for that period. The filing shall be rendered in the tax returns form, which is appended to this as Appendix 2. The rate for payments is 3% of turnover or 2,500, whichever is higher. The mode and the procedure for paying the tax shall be within the exclusive jurisdiction of the relevant tax authorities. So they shall be empowered to tax these people and then make provisions as to the mode of collection and the procedure.
We can go on and on, but let us share the Lagos experience with you. After all, Lagos State is an experienced hand in this matter.
In Lagos, we classify professionals that are in private practice as part and parcel of the informal sector, like the accountants, the medical doctors, the tax practitioners, and others are classified as informal sector. Within the informal sector, we have the markets, those people that buy and sell only. We have the informal sector markets. And last but not the least, we have the informal sector artisans. We realize that the attributes of each of these sectors differs. We cannot use the same methodology of assessing the market people when assessing the artisan. We cannot use the same method while assessing the professional and use the same method when assessing the market people, based on their level of education, the kind of business they do, and where we can get them. The market is situated, is located. We can talk to the market leaders there. When dealing with the vulcanizer, for instance, or the mechanic, they don't have a common place where you can easily access and talk to them. They are scattered all over the states. Also, with the professionals, yes, talking to the lawyers, do we need to go through the MBA? Fine, we'll go through the MBA. But some of them will tell you, sorry, I'm not a member of MBA. MBA is nothing but a trade association. I can choose not to be a member of MBA, and I can practice my legal profession. ICANN, fine. We have to go through ICANN. ICANN is a certification organization, which is different from MBA. So we have to go through ICANN. Recently, we have relied on the amendment to the Personal Income Tax Act, which gives the power to State Internal Revenue Service to demand for professional association information in prescribed format. We've written to all professional bodies in Lagos that they should give us the names of all their members that are ordinarily residents in Lagos. We design a particular format for them. They give us the names, the addresses, the practice name, their telephone numbers, the email addresses. And it was clearly stated in our letter to them that the intention of getting this is because of tax. And we refer specifically to the section of the Personal Income Tax Act as amended that gives the Internal Revenue Service the power to demand for information from the professional association. Before now, we have had issues with them. When we write to them, they will say, sorry, we cannot give you information relating to our members because they are our members. So we were able to do that. In Lagos, we classify the informal sector into three. Formal sector, one, we call them the professionals. Two, we have the artisans. And three, we have the markets.
Mr. Ali went on to ask an all-important question.
Can we just leave the informal sector and they should not pay taxes? Yes, because of the issues involved, because of the problems involved. The answer is no. No. We should not leave them. They must make their own contribution, no matter how small, to the Commonwealth. Why? Because they benefit from the society. On moral grounds, the law aspect of it says you must pay, and morally they must pay. You see, what we also experienced in Lagos before we started running after the informal sector has more to do with people in the informal sector. Some of them will complain that, sorry, I work for Shell. I don't have option other than somebody will deduct taxes from my income and remit same. I know a friend of mine, I know one person in my church who runs a business in Alaba. The guy doesn't pay tax. You are only running after me. You are not running after other people. I know several people that are in the informal sector that are making more than me, and they are not paying taxes. if care is not taken and if it's not properly managed, it will lead to taxpayers' resistance, apathy, and resistance. Because the guy will look at it, where is the fairness? I am paying, somebody else making more money than me is not paying. So we have to look at it from that angle first and foremost. That, somebody will have to pay because you must pay. If you don't pay, you are going to affect what we are even collecting. Because those people that are paying will develop apathy. Those people that are paying will resist you and point at the others that are not paying. So one of the ways of getting around the problems associated with the informal sector, which has been used over the years, tends to be the presumptive tax regime, which in our own part of the world we may want to call the minimum tax. But the issue is that what is presumptive? Why presumptive? We have mentioned the problems of taxing the informal sector. They don't have records. They're all over the place. How do we get them? And we have agreed that we must tax them. We cannot tax them because it's difficult to tax them. It becomes very difficult to tax them. It's not easy. But we have agreed that we must tax them. Then we have to come up with a platform that we will use in taxing them, irrespective of how inefficient the platform might be. Because there are a lot of arguments against presumptive tax. But irrespective of the argument against presumptive tax, that's the only platform we can use in assessing the informal sector to tax. In Lagos, we have presumptive tax. And it depends on the sector. We'll look at that. The sector, the industry, and the individuals. We have some presumptive tax, some sector in the market. While dealing with the transport owners, we have separate method of assessing them. If you own a car, one car for transportation, we have an assumption as to the income that you have. If you have two, we have assumption as to that. If you are not the owner, but you are the driver, we have an assumption as to your income. We might not be right. Yes, we agree it might not be the best. But it has assisted us in bringing as many people to the tax net as possible. And also getting something from them, no matter how small, which ordinarily will have not gotten at all.
Professor Dakas C.J. Dakas, a senior advocate of Nigeria, presented an overview of presumptive tax regime in other climes.
Ghana was the first African country to pioneer presumptive taxation. And in presumptive taxation, in the specific context of standard assessment, what you have is a situation where there's a fixed lump sum payment that targets specific groups. So, for instance, you find that an enterprise is targeted, or a profession is targeted, or an occupation is targeted, and all you do is to say, you're going to pay 2,500, you're going to pay 10,000. Now, that's the basic mode. But the problem you have with standard assessment is that there is no equity. As a matter of fact, it violates a fundamental cardinal principle of economics. At the heart of economics, of the fundamentals of economics, is essentially you pay as you earn. Whatever you pay by reason of tax should correspond to whatever you earn. But the challenge you have with equity in this respect, and I will deal with that in detail when I come to the draft regulations, is that if you say that you're going to take artisans, you're going to take market women, you're going to take retailers, you're going to take low-level service providers, and all of them are going to pay a flat rate of, let's say, 5,000, or you pay 5% of turnover. Implicit in this is what in the literature we call vertical inequity. Vertical inequity means that you cannot take an artisan, you cannot take the cobbler, then take the vulcanizer, then take someone who has a hairdressing salon, then take someone who is into low-level mining, and then you now say that when you are dealing with these different categories, they're going to pay a flat rate. And the additional challenge with that is because you are lumping different professions with different earnings. The implication is that if you're not careful, if you now put a high threshold, you're going to have backlash from the people who are down the ladder. If you bring it down very low, then you find that you're not going to have high revenue yield. So the challenge actually is that standard assessment does not enable you to have a high revenue yield, because on the one hand, if you put a high threshold, the people down the ladder will revolt. If you bring it down to the base, then you find that the higher earning people within that framework are able to escape. And so actually standard assessment does not give you as much revenue as you would expect. But the challenge you also have is that of horizontal inequity. Horizontal inequity because you're dealing with one profession, and yet not everybody in that profession is the same. Let's take lawyers, for instance. If you take a lawyer that was called to bar last year, and you say we're going to give you a flat rate for lawyers. If you take a lawyer called last year, then you take a lawyer that has been in practice 5 years, another one 10 years, another one 15 years, another one 20 years, another one senior advocate. You cannot afford to have a flat rate without a sense of the dynamics of the differences in experience, the years of practice, and their differing revenue. So you then have horizontal inequity, and you also have vertical inequity. What has happened in Ghana, which I'm sure very many of you are familiar with, is that having experimented with standard assessment from 1963, Ghana then decided to have a graduated scheme. So it is possible to calibrate. Okay? And so instead of saying that all lawyers should be paid, should pay the same flat rate, you can say, for instance, lawyers who are 5 years post-call, lawyers who are 10 years post-call will pay this, lawyers who are 20 years post-call will pay this, lawyers who are senior advocates will pay a different category. To that extent, you are able to limit the range of horizontal inequity in that profession. But Ghana has not stopped at the level of standard assessment. As you would find in the literature, Ghana has also gone on to look at estimated assessments.
You can see that participants at that workshop had great fun. What do you think? To make your inputs, to make your contributions towards putting together the regulations for presumptive tax regime in Nigeria, you can use any of the email addresses on the screen. There were other contributions. And of course, participants had the opportunity to digest and dissect the regulations.
The working team did a lot. We had several scenarios where we had bans, we had issues of, let's see whether everybody in Wuse market, for example, who is trading in jewelry or clothing, let's give them a flat rate. But we'll realize that not everybody earns the same amount of money. And please don't forget that Nigeria is such a huge country in terms of population and businesses. It will be so complex trying to list everyone and every category of businesses. We considered all those and several other scenarios, and finally we agreed that the best thing to do would be to ask every single individual or business or enterprise to just go on ahead. You did the business, you know how much you earned. Based on your turnover, give us 3% or 2,500 naira, whichever is higher.
I'm sure some of us will be wondering why we put various dates as the due dates of filing. You know, we all know that majority of the taxpayers we are talking about are people that, you know, they don't keep records. And once the amount of tax payable is a little bit big, it becomes a sort of disincentive for them to comply. So we now felt that, you know, it would be better if we can give them the opportunity to pay the taxes instrumentally.
Permit us to leave you with this take from the acting executive chairman of the FRS, who is also the chairman of the Joint Tax Board. We believe that what he has to say here effectively breaks it down for the layman. What exactly is presumptive tax, and what do you seek to achieve with this initiative?
We are targeting the informal sector to interact with them, tell them how important it is to keep their records, because when you keep your records from non-record keeping to record keeping, you will even appreciate what you are doing. With that, a taxman can come and say, okay, you have done A, B, C, D, pay a small amount of money. Once you pay that money, you will get tax clearance. You can go to the bank with their records and get some sort of loans, soft loans, which will help to grow the business.
Okay. Who is going to drive this? The Federal Inland Revenue Service, the state, or the local governments?
Well, ideally, it should be Federal Inland Revenue and the state's revenue boards. And that's why, you see, today in our midst, the state revenue boards are here in participating in this workshop.
Chineke me, you don't increase my salary money. No be mistake. Oga accountant do so. Papa Junior, you never hear of Peter. Now the new MD be that. Talk now.
Peter, na Personal Income Tax Amendment Act, where Mr. President just signed for law to better the life of him people, so them to go get more money to enjoy with them family. You see this amended act, they don't reduce the tax with the on top your salary money. They can't increase consolidated allowance money where we go to get every month. And you know, say, now the president will listen if you do better thing for the people.
Ah, Mr. President, you do well, oh. I'm blessing you, they think of me when you they sign this bitter. Now I feel do boku things this year. I feel rent shop for Mama Junior, buy textbook for Junior, send money go village, make the thing begin build my house.
So you say I'm the landlord?
Of course. Oh, you just say I can't breathe for you. Peter, Peter, hey, Peter.
JTB, creating a tax-friendly environment.
Welcome back. It's time for our segment, Know Your Tax Office.
Welcome to Know Your Tax Office. The Individual and Enterprises Income Tax Office is peculiar to the Federal Capital Territory alone because the Federal Inland Revenue Service collects the personal income tax from individuals and enterprises in the Federal Capital Territory. This week, we are taking you to the various offices in Abuja. The Asokoro IEITO is located at number 1 Samara Machel Street off Kwame Nkrumah, Asokoro, Abuja. The Asokoro office also houses the Kugbe Nyanya Market Satellite Tax Office. In the Central Business District, the office is on the first and second floors of the Nigerian Agricultural Credit and Reconstruction Bank Plaza, Central Business District, Abuja. While the Central Business Area office is located at Rivers Plaza, plot 470 Abogo Lagama Street, Central Business Area, Abuja. The Gaki office is at number 12, Port Harcourt Crescent off Gimbia Street, Area 11, Gaki, Abuja. In Gwagalada, the office is located at the Federal Capital Territory Secretariat, CIPB Building, near Atlas International Hotel, Secretariat Road, Gwagalada. The Utako office is located at plots 903 Obafemi Awolowo Road. The office also serves as a satellite tax office for the Utako market. In Wuse, the office is located at plot 26 Sudan Street, Zone 6, Wuse, Abuja. At the moment, the Meitana IEITO, along with the MSTO, is located at Owena House, plot 76 Rafael Shodainde Street, Central Business District, Abuja. The Husman Street office is under renovation and will be opened soon. And for the satellite tax offices, the IEITO office in the Dede Market is located at Shop 6 beside First Bank, Dede International Market, Abuja. In the Gaki Market, it is at Shop 4547, Block B13, Usman Aliyu Street, Gaki Modern Market, Gaki, Abuja. In the Gudu Spare Part Market, it is at shop number S9 I-Rise behind Diamond Bank, Gudu, Abuja. In the Wuse Market, the office is located at Ruchas Okorocha Plaza, Wuse Market, Wuse, Abuja. While in Zone 5, The office is located at the Buildings Material Market, number 15 Undola Street, Ambezi Plaza, Block B, 3rd floor, room 3010, by Building Material, Zone 5, Wuse, Abuja.
We want to thank you most sincerely for spending time with us today, and we wish you a fruitful week ahead.